Hi everyone, my name is Moe and welcome to Income Investors. With me today is John Whitefoot, and we're going to be talking about an exciting dividend play. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. No matter how safe an investment sounds, it comes with risk. To read more about risk, please see the description below. Recession and inflation might be a burden for an average person, but it doesn't affect everyone the same way. And that's what makes today's pick, which is Movado Group, traded on New York Stock Exchange under symbol MOV. It is a luxury watch brand and a great long-term option. In fact, top-tier consumers are fueling the luxury sales sector, with high-end demand in the US, Europe, and Asia still exceptionally healthy after 2 strong years of sales. Eventually, this will normalize, but after 2 terrible pandemic years, it appears as those with lots of money are looking to splurge a little bit. This will eventually normalize, as I said earlier, but even then, there'll always be new millionaires hoping to look the part. John.
Oh yeah, exactly. Like we pick stocks for income investors with high yields, or we don't just randomly pick stocks with high yields and pray that they keep paying them. We look for stories that have a compelling background. And that's what Movado Group has, I believe. There's always a luxury market, and the luxury market tends to do well over the long run because there are always enough wealthy people to support sales. And even when the stock market crashes, wealthy investors tend to do well during the rebound, better than the average American. And there are more than enough millionaires and billionaires in the world that have ample cash kicking around to spend on whatever they want. In fact, in the US alone, 1,700 people become millionaires each and every day. Globally, there are 62.5 million millionaires, and that's up 11.4% from 2020. So again, during the pandemic, or since the pandemic, 11.4, the number of millionaires has grown by 11.4%, which is massive. And that extra cash is helping fuel the luxury good markets. In 2020, the luxury good market size was 257.2 billion, growing to 352.8 billion in 2027, expanding at a compound annual growth rate of 4.6%. That's a compelling story. Now, there are a large number of luxury brands under the luxury retail umbrella, but most of them don't provide a dividend, and many trade in exchanges in Europe. And as expected, some are pretty costly. For example, LVMH, Moe, Hennessy, Louis Vuitton trades at around $975 per share and has a dividend of 1.34% and a trailing price to earnings ratio of 30.99. Ferrari trades at 296 per share and sports a dividend yield of 0.67% and a trailing PE ratio of 48.94. Okay, and then there's today's pick, which is Movado Group, which trades at around $25 per share, pays an annual dividend of $1.40 for a yield of 5.49%, and has a trailing PE of just 6.40%.
So if I understand correctly, luxury brand selling for a slightly lower price, pays higher dividend, and what's not to like about this? But tell us a little bit more about Movado Group. What do they do?
Yeah, Warren Buffett is famous for saying, invest in what you know and nothing more. And Movado Group is pretty simple to understand. The New Jersey-based company designs watches and high-end luxury watches, and to a lesser extent, jewelry. Some of its biggest brands are Movado, Ebel, Olivia Burton. It also licensed third-party watches from Coach, Calvin Klein, Hugo Boss, Lacoste, and Tommy Hilfiger.
And as we talked about this earlier as well, luxury sales are solid and number of millionaires is increasing. How is Movado Group's financial looking?
Yeah, macroeconomic headwinds are hitting the average American as expected, but Movado Group did fairly well in fiscal 2023, which ended January 31st, 2023. And that's pretty solid considering that fiscal 22 was a record year. So coming off that, the fact that they're continuing to do well is a good sign. So for example, in fiscal 2023, they reported top line growth of 2.7% or 7% on a constant currency basis. Operating income was up 2.5% at a record 120.4 million. Adjusted operating income climbed 3% to a record 123.2 million. Full year net income was up 3% at $4.12 per share, while adjusted net income inched up to $4.22 per share. And most impressively, not a lot of retailers can say this. It ended fiscal 2023 with 251.6 million in cash and zero debt. And fiscal 2024 looks like it will be just as good. But the company did warn that the first half of the year will appear a little rough, with sales expected to decline in the range of 9% to 12%. But that has more to do with the fact that it reported, exceptionally crazy record results in the first half of fiscal 2023. So they're sort of like geographically moving out of that. So the sales will look like they're down, but they're still expected to be pretty strong.
Understandable. And then now let's talk about their dividends. What kind of a history do they have? And we briefly touched on their dividend yield, but tell us more.
Well, yeah, generating reliable cash flow with a wealthy clientele and having huge cash and no debt to contend with is a win-win for yield hogs. In March, the company declared a quarterly dividend of 35 cents per share, or $1.40 per share on an annual basis, for a yield of 5.5%. That's far over the current U.S. inflation rate of 4.9%. What's also interesting is that Movado also declared a special dividend of $1 per share, which management said, and I quote, demonstrates confidence in the future performance of our business and returning value to our shareholders. To be fair, like any stock, the dividend distribution comes out of the discretion of the board of directors, and sometimes companies have to maintain, cut, or even suspend their dividend. And this has actually happened to Movado twice, once during the financial crisis and during the pandemic. But thanks to strong results, it reinstated its dividend in November 2021, and it's been rising steadily since then. The company's, again, 35 cents per share dividend is now 75% above its pre-pandemic level of 20 cents per share.
And how has the MOV stock done? I mean, what's been happening recently?
Well, yeah, Movado stock did exceptionally well coming out of the pandemic. Since then, it's up more than 450% from its March 2020 lows. Since the start of 2022, though, it has, for the most part, traded in a pretty tight range. But the long-term outlook for Movado stock remains solid, with analysts providing a 12-month share price target of 35 per share. And that points to potential gains of 25%, which far superior to some analyst calls for the S&P 500 to drop 20%.
All right, John, thank you so much for your analysis on Movado Group. Just to recap, Movado Group, luxury watchmaker. They have decent balance sheet with no debt. Their financials are solid. Their dividend is solid. And they have a history of paying out special dividends as well. I hope you like what we talked about today. If you want to know more about John's ideas, you could go to incomeinvestors.com, where John writes about exciting dividend opportunities on a regular basis. And I'll just end the video here. And I'd kindly ask you to like this video and subscribe to our channel. And we'll see you soon.